So what is the biggest challenge that you see facing the industry right now?
I think it's quite a long-term challenge, and it's one that's been evolving for quite some time. I mean, in the mid-1990s, the industry knew and predicted that it would have to find new sources of oil and gas, new basins where the industry had invested capital, developed infrastructure, and was able to produce the resource as cheaply and efficiently as they had got used to producing it in all the basins that we were used to in the mid-1990s, which would be the Gulf of Mexico, the North Slope of Alaska, the UK, Norwegian North Sea, the North Sea generally. And that was all very well forecast at the time. We knew that what we were doing in terms of reserve additions then, most of the reserve additions were coming from revisions to existing asset bases that were already developed, built up, capital had been invested, and so we were sort of exploiting a very efficient end of the capital investment cycle. So we knew at that time that that game wasn't going to continue forever and that we would then have to find new basins. And we always knew that the new basins in the earlier phases, when capital was having to be invested, when infrastructure was being created, that was going to be a particularly expensive time. That's exactly what's happening now, and we're just seeing it. We knew it was going to happen. But the challenge of the industry is to make the adjustment from a period when it was relatively easy oil. There'll be easy oil again, I think, once these new basins have been fully developed. But for now, we're having to get used to the idea of starting from scratch. I'm exaggerating a bit, but starting from scratch again.
As you look out the next several years, how do you see the landscape potentially having to shift beyond just this recognition that you mentioned?
I think there's going to be first a shift in the supply, where the supply is coming from. What we see happening in North America is just one example. But you're going to, I think, have to get used to different flows of product and material, different markets into which you're selling the hydrocarbons, different markets in which you're producing, and the different models that will have to evolve between host governments and operators. All of the challenges that we've known, but I think that we're just in a phase where they will probably become more and more important, more and more to the fore.
That makes sense. And then just a more specific question on the U.S. Certainly the tight oil boom has been built on a lot of high-yield debt, and markets have been very, very liquid. Do you see with the oil price that closing at all, or do you think that it's probably just a short-term panic and capital will continue to flow?
I mean, it's always difficult to predict a trend from one or two specific examples, but I mean, I've seen it. I've seen it that people do pull back now because there is a change in sentiment, and they're just not quite clear where it's going to go. Now, the price, 85, 80, wherever it is not bad in and of itself. Mm-hmm. It's the instability and the change from where it was 2 months ago that is worrying people, and that's inevitable. So I suspect that it's a question of, letting the dust settle, letting a new price be established that people are used to and can think through.